Welcome back to the Wealthy Bucket, guys. Wanted to discuss a quick trade that we offered to our premium members last night through our newsletter service. And it was a really simple setup. Our main bread and butter is stocks and options. However, we've started to add to our repertoire for our premium service that we're going to maybe include some currency future trades in upcoming sessions. Now, if you've been following us for a while, you'd understand that our entire model is based on market correlations, and we use every available asset out there. We're just not looking at one single stock or our favorite stock list or whatever it may be. We're taking every possible component of the market to formulate the most high probable opportunities available. Now, we identified the negative correlation between the pound and the US dollar. We were concerned that the US dollar kept trading lower, that it might, based on current market correlations, drag equity markets lower. As it stands right now, equity markets are flat for the day. But we wanted to take advantage of this British pound future while it was still rallying upwards in the event that the US dollar trades lower. As you can see within these purple lines here, this was our entry point at 15307. We set an absolute stop loss at 1.5235. So on a one contract basis, the investor would have to come up with about, we'll call it $1,800 US, and each tick that they are making or losing is the equivalent of $6.25. So if a premium subscriber took this trade on one contract, they'd have to come up with about $1,800. The maximum loss would be about $450, not including commissions, of course. And the target is set up here at about 1.5419, which would mean that the investor would receive, if this idea hit our target, about $1,100, and we'll call it $1,150. So the risk reward profile is pretty decent. Now, keep in mind, even when you set a target, it doesn't always run to the target. So right now we are currently making a few $100 on this one. If you're already happy with a few $100 throughout the day, then just take it. There's no sense in waiting for the price to reach the target. It doesn't have to go. It's always good practice to take money off the table. So this is just a quick example of what it is that we do with our students and our clients, the guys and girls who are interested and determined to understand what financial literacy is all about and how that financial literacy can translate into profits. So this is just a quick example of a trade setup that we offer our premium subscribers, and they're absolute, meaning we're very precise as to where we want to take them. We're very precise as to when we want to get out. The stop loss is probably more important than the target, or if the target is met. And this is what we do with our students. Day in, day out. You don't have to worry about how do you draw the lines or where do you draw the lines. It's not important. It's about interpreting where all these buyers and sellers start to put the money back to work in the markets. As you can see, we identified this area for a couple of reasons. One being here, the market just could not hold in that same price level. The sellers were there before, they're just not there anymore. So what happens? Price pops up, price comes back down here. This is a very, very important area, and this is why we've taken the trade here. We did miss the trade down here simply because the price of the sterling traded below the trend support, so we're just not interested until price reaches back to this all-important level around here, and we're willing to wait it out. We're not here to pick tops and bottoms. We're just here to grab some cash from the markets and run with it. Now, another trade that we offered our premium subscribers last night was the dollar trade. And once we took the pound sterling once we took the pound sterling long, we took short the US dollar. And again, we're identifying a specific level where we'd like to just grab a few clips of the market We're still in this trade right now. Maybe we might want to start thinking about getting out. Obviously, we're not making as much as we were earlier on this morning, but that's how trading goes. Sometimes you let them run, and if the motivation or the conviction behind the market participants fails, you got to take the money off the table so that at least you can say you took some cash home today. All right, guys. So follow us on Wealthy Bucket. Follow us on Twitter. Follow us on YouTube. If you're interested in obtaining financial literacy, this is where you start. Now, if you're not interested in financial literacy, that's all right as well. Share this with your family and friends, someone you care about who you feel that can benefit from understanding how the markets actually work, and correlate them so that they can create the income that they deserve. All of these levels here we provide to our premium subscribers each and every week so that they can easily transition them over to their own trading platforms, and the market becomes easy to follow because it's pretty much done for you. All you have to do now is just keep watching it every day, not every minute of the day, but just check it once, twice a day, and you'll really start to learn and see how all these markets are interrelated. That's why we use our multi-asset model. It helps us locate opportunity, and it helps us create the most high probable outcome, not only for ourselves, but for our premium members. If you're interested in financial literacy, then check us out on our website. That's www.wealthybucket.com. Follow us on Twitter. Follow us on YouTube. If for whatever reason you're not interested in financial literacy and really understanding on how money works within the marketplace, that's okay too. Introduce us to family members, friends, people you care about who you feel that can really benefit from understanding how money works. Not so much so that they can invest on their own, but most people do have financial advisors out there and planners, and they're just subjected to year after year of inconsistent earnings. It gives them the opportunity to ask the right questions and really challenge their advisors. It's about financial literacy. It's about being proactive. We're about building wealth and building a legacy for not just for ourselves, but again, for our students and our subscribers. So visit us at wealthybucket.com, and you can sign up for our free monthly newsletter. If you feel that our investment model, it's a multi-asset investment model. If you feel that this is going to help your financial education, it'll get you on the right path. As you can see, we use every asset that's available out there. We trade everything because we feel that everything is all interrelated. If you feel that it'll benefit you, then sign up for our premium services. Follow us on Twitter, follow us on YouTube, share it with your friends if you feel that they can benefit from it. Just spread the word for us. We really appreciate it. We appreciate you coming by today, and thank you for stopping by the Wealthy Bucket.
Oh, William, my boy, right on time. Come in, come in. Sit down.
No thanks, guys. I already had breakfast this morning.
This is not a meal, Valentine. We are here to try to explain to you what it is we do here.
We are commodities brokers, William. Now, what are commodities? Commodities are agricultural products, like coffee that you had for breakfast, wheat, which is used to make bread, pork bellies, which is used to make bacon, which you might find in a bacon and lettuce and tomato sandwich. And then there are other commodities like frozen orange juice and gold. Though, of course, gold doesn't grow on trees like oranges. Clear so far?
Yeah.
Good, William. Now, some of our clients are speculating that the price of gold will rise in the future, and we have other clients who are speculating that the price of gold is going to fall. They place their orders with us, and we buy or sell their gold for them.
Tell them the good part.
The good part, William, is that no matter whether our clients make money or lose money, Duke and Duke get the commissions.
Well, what do you think, Valentine?
Well, it sounds to me like you guys are a couple of bookies.
I told you he'd understand.